Lois Karanja, you could pray for us as we start.
Thank you, Peter, and welcome our customers to today's session. Let's pray so that we can start. Dear Lord, we thank you for your grace, which has been sufficient for us. Thank you for our customers who you have given the opportunity to join us for today's meeting. I pray that what we are going to be able to present and share with them will be of benefit to them as they grow their wealth, even as they run their businesses and go through their daily activities of growing themselves. We pray also as a bank that we are going to be able to continue to impacting on our customers in everything that they do. This we pray, trusting and believing. Amen. Back to you, Peter.
Amen. Amen, Lois, and thank you so much for that prayer. Our customers, again, we want to welcome you in this session. Is another Thursday that we'll be having a good discussion and a great discussion on the opportunities that are here in the real estate market. And this one came as a way of responding to the feedback that you gave us, that we need to invest in real estate and we need to invest right. And today we'll be having a very good discussion on this. And we'll be happy to get feedback, questions from you, and we'll be able to clarify a few things here. And of course, we'll talk about the solutions that we have as a bank to support you in investing in the real estate market from our mortgage department. And so in terms of the agenda, we'll be having a presentation from Chris Shege, who is our head of mortgage department. He'll be giving us the real estate trends, role and impact of developers in the housing sector. And we'll also be having Patrick Masharia, who is our head of property hub in the bank, from our mortgage department still, to give us highlights on the real estate opportunities that you can tap through our bank. After that session, we'll be having a Q&A session, a question and answer session. So we want you to keep sharing your questions and we'll be able to address them during the Q&A session. So, so we have put our microphones and our videos muted just to make sure that we don't have a lot of interruptions and we have a very good session. We'll also encourage us to use the chat box down there to share comments, feedback, and even questions. Down there, you feel free to also use the feedback icons to share the progress, the feedback as we progress with the session. Of course, we are also requesting you to share the reactions, and we also want you to enjoy this session. So before we do that, we want to ask you to share your name and where you are located, your expectation of this webinar, and as you have had me say, share any question that you have even as we proceed. Thank you so much as you do that. Thank you. Good, I see all of you. Deman again, I see you from Aldiriva, Karibu Sana. Another Daniel Gori from Rongai, Benson Wingi, Joel Momanyi. I see all of you sharing your locations and your details. And yeah, all the way from all over the country. Good to see all of you. Della from Kisumu, Karibu Sana. Welcome all of you. I can see you are in good numbers. We are almost 300 as we start this session, and it's a great opportunity for us to talk to you and also have this discussion. Thank you so much, Lois from Kiambu. I see you. Kevin from Roiro, Dan from Emali, Triza from Kisumu, Monica from Kapenguria, someone from Mombasa, Yes, the comments are coming in numbers. And thank you also, Michael Talam from Langata. My expectation is to know how to open an MSME account and also get mortgage. Thank you so much. We'll be having that discussion coming up. So as we progress, I want to invite Moses. I don't know whether Moses Gitau from business banking is in the session. No, he might be joining later, but as a way of just welcome, is just to say, as we proceed with this session, we continue to empower you with information, and a number of you, even from the chat, I can see you've been attending our session as a way of empowering us with information that is critical. Noting that COVID has, had serious challenges and implications that happen in our businesses. I think for a bank, as a bank, we want to keep having sessions to talk about ways to navigate through some of these challenges, and some of the ways as a bank we have come in to support you. And I think even as we progress, it's an ongoing engagement that we have every week. And today we have this session on the real estate. So I want to ask Chris Shaga if you managed to join with Patrick Masharia from our mortgage department. If you managed to join, so you could take it up and progress with the presentation on the mortgage and the trades that are there. So we will be able to have that discussion. So Patrick, you can hear me, then you can take it up and proceed from there. Thank you.
Thank you, Peter, for inviting us to this very session. And good morning to you all on this call. As introduced, my name is Patrick Masharia. And without much further ado, Chris Shege, I don't know whether you've managed to join the call. I would want to introduce Chris Shege just to share some insights on the real estate dynamics, trends, impact, and role of business people, as well as opportunities therein. Even as we go about our normal business, we want to see how else we can also venture into real estate as part of the sectors that we can also play in. So, but even as Chris settles down, like Peter had mentioned, remember these are two-way engagement. And for this reason, our communication lines are open, and at your convenience, you can leave a message on the chat below or send an email to businessbanking@copbank.co.ke. Or better still, you can reach us on phone through 0711 049 129 or 0711 908. So Chris, I don't know whether you can hear me, Chris. Okay, if not, then I think we could, Chris, you can hear me?
I can hear you. I can hear you very well.
Thank you, Chris. Maybe you can start us off.
Yeah, good. Thank you. Thank you. Thank you. Good morning, everybody, and thank you. And sorry for that small hitch. It's a technology hitch. I think some of the things that came around because of COVID, that we have to take everything online. We are so used to presenting to people on a face-to-face. Thank you very much. My name is Chris Chege, and I'll be going through some of the topics, developments around real estate. And around me, we make it more an interactive session in that we can start asking ourselves questions as we move on. I think, thank you. Go to the next one. Good. I think let me start by saying that the Kenya real estate market is in cycles, just like any other market, and Kenya is not an exemption. However, ours also tends to have another peculiar cycle, a cycle that is driven by erections. So from one erection to another one, we tend to see prices of properties, interest in properties, development of properties, taking such kind of an angle. And it's something that for every person who is entering that market needs also to be very, 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 very careful with and understand how it can impact. I think the other thing that comes in is that it's a diversified market. And both in terms of income, geography, the types, the terms of income, and everything else, i.e., we can't say that is a very basic market. So when you go to Kenyan real estate, it ranks well. And I think we have a market as vibrant as maybe top 10 in Africa. And in that way, then it has all the sophistication, but it has the simplicity. But of course, it is one market that you can't see through what is happening. Data does not flow very well. It is like the market is segmented to residential, real estate, commercial, industrial, and RAND, and all of them together. However, there tends to be more activity around RAND, and I think most of the people associate RAND as the full real estate. However, RAND is only a component of real estate, and that's where real estate is established. So yes, it is a part, but it's a raw material, if we can say, on the developed real estate. And no wonder then that we think that Kenya is a vibrant market when you look at the aspects of the real estate. Now, real estate has been on a growth in this country, and that can be evidenced by the so many things that have come through. We have several shopping complexes, we have got development, we have got huge tracts of land that have been serviced, and all this is an indication that there has been a vibrancy in that area. I think vibrancy and returns are two different things. Vibrancy and order, that's another angle altogether, but yes, it is there. Of importance to note, I think, is the offices. Offices, there was a craze in putting up offices, and offices were engineered because these are the successful developers who came out of residential and were seeing that it is much cheaper to develop offices, sell them, including the office space and the parking and everything else. The margins were much better. So, however, those offices, a good number of them have remained not occupied because where they were stationed is away from where people are staying. Where they were stationed, we didn't have the correct ratio in terms of services. Do you have the shopping for these people? Do you have the residential commensurating? And most of them were within Upper Hill and some portion of Westlands. Thank you. Next one. I think there is also an aspect of that our real estate has lacked affordable housing. And for a long, long time, I think the players have only concentrated in the top 10%. Hence, the government for the last few years have mooted and put in under the 4-key agenda that housing comes into play. And this is catering for the other segments of the market. And I think the key issue that has come through is that to create affordability and to have decent housing for all. So I think that has been an area that now has gained a lot of momentum. Again, now, due to that aspect of not having houses there, we have what we'll call informal settlements. And we have a huge informal settlements around Nairobi. And most of them will lack the basic infrastructure and will not be what you can define as housing. However, this is where our brothers and sisters are housed. I think the biggest challenge then is how do we upgrade this? Let me thank the customers on this platform because a good number of you have come up to play in this area by helping in building what we call apartments for rental. Apartments for rental are seen to be maybe the history of affordable housing. And most of those houses are built almost in convenient areas where the factories are, where the markets are, and these people can be able to commute by way of walking. So our journey in terms of affordable, especially for rental, I think has been largely played by you as our customers. Maybe the war that has not begun is one for houses for owner occupation, which tends to be quite far from the central area and of course do not attract a lot of attention. So I think it is this one that has now brought the big talk of how then do we bring affordable housing? What are the kind of measures? How do we develop that ownership? How do we facilitate all of us in terms of people owning their home? Yes, we can say they're in informal setting, they are in rental apartments, but how can we create a home for them and knowing what a home is for everybody? So I think one of the key things that have come in is that we've had very, very many cooperatives set up and chamas and investment groups and all of them with the one idea, either to buy land and build data all to progress to the next level. And some have been very successful, others have not been very successful. But I think the bottom line, the need and demand for housing comes in. And I think this starts creating the opportunities that you need to start looking through. In those groups, why do they come together? They come together to try and manage the cost. They come together to try and manage the layout, the community setting, services, security, and everything else. Next. Next, please. Now, these observations help us to understand where Kenya sits. We have what we will say are serious funding gaps in housing. And this comes in especially when you look at the end financing. And the end financing is because the people who need housing are mostly the informal sector. However, our systems are not very styled on informal sector. So one of the key questions we'll be asking ourselves is, then what do we need to do as customers so that we're able to take advantage of this? How do we prepare ourselves? How do we put our accounts together? How do we have everything that is going to help us to get financing? And I'm sure this topic will come through as we'll be looking through, and Patrick will take us through on that one. I think we have had serious infrastructural challenges, and I think this is something that we know, and I don't want to waste a lot of time on this that we very well know. Infrastructure, this means that for you to have a sustainability of value, for you to have a housing that can withstand with the time that you have borrowed, maybe 10, 15 years, infrastructure is something that must be there. However, infrastructure comes in very expensive and at times can take up to about 30% of the cost of the project. Again, for a long time, we've tracked what was called secondary mortgage market. But again, we have to thank the government because Kenya Mortgage Refinance has come in as a first player to that level. And it is through this that we can start having a very active primary mortgage market, which will be fed by this, secondary mortgage market. I think the land registration process, the titling process, I think nobody needs to belabor. And that has been a process that has also become a bottleneck because it can take a little bit long. And as a developer, the ones who are here, when you develop a property, you tend to be restrained because the process can take 6 months, 7 months, in which case the carry cost for your project in that the shortage of houses is imminent, and the last statistics still show that we are short of about 200,000 of houses in the country, and that's maybe we'll just say the number of 200, which has been there for several years. So I'm sure we can even be even more than that. I think on the other side, if you look through, the urbanization in Kenya has been quite high. It's rated, the last data I got was about 5% on average. I think accessing land is not very easy in some portions because they are a lot of land is held by individuals, purely maybe for speculation. And this, of course, sends the cost of land higher, forcing people now to spend too much on land. And if you look through, if your plot now is going to take about 40 or 50% of the cost of the project, it means then it's only 50% that is your house, 50 is land. I think that aspect now does bring an issue in terms of how do you go ahead. Then, of course, there are the stringent planning and regulations, restrictive building standards, poor economic performance, and also increased poverty. And especially if you look at the times that we are living now, I think there have been so many things that have sent a good number of our people down a route that they have not been, especially in terms of income. Thank you. I think further observations and around me, because this is what sets the ground for in our real estate sector. There's heavy traffic, and I think that's one thing I agree. On average, most of us will use about 1.5 to 2 hours, even to 3 hours to get to where we are working, the CBD. And this has caused most of the people, decentralization, try to building so many roads and trying to open up as a way of trying to fight on this one. And I think the main issue here is that with this kind of a traffic, then it redefines what kind of productivity do you have for that person. If you are leaving today in the morning, if you left maybe as far as maybe even Kajiado coming into Nairobi and you used maybe about 2 or 3 hours, by the time you get to the office, of course, it's quite tiring. And that's some of the things that are emerging. I think in this case, then you look through that there's a heavy investment by the government in infrastructure, which has really helped. It has opened areas that hitherto were not in use. I think there is also changing technology, and technology has come in now to play in an area where I believe the houses can only be put up by stone and mortar. And in this case, we are seeing technology, panels, houses are on the rise. And I think these are coming in two ways. One, they reduce the time that the houses are built. Two, they play around with the cost by reducing the cost. And in this case, you can create affordability through that. I think we've also seen a shift from supply-based real estate to demand-based real estate. Let me explain that point. When I say demand real estate, is that it is known that in real estate is only where somebody goes, borrows, gets the money, invests, and then calls people to buy or people to come and rent. In other products, you first of all identify the market before you do the product. I think real estate is slowly going in that direction, and it will be very difficult for anyone now to get into a development before they can identify the demand. Now, interesting things have come in. I think things like partnership are on the offing, partnership with circles, partnership with pension funds, partnership with groups, gated communities. All these are ideas that are supposed to harness how can we be able to get a demand-based kind of real estate as opposed to a supply base. Supply is where you build and just leave it and hope somebody walks your way. This also has been real, especially in the area around the commercial projects. If you look through in the commercial projects and specifically the retail segment, this has been really hard. The retail sector in the market, or the retail segment, which we can call the shopping malls and the rest, it's been very unstable for the last maybe 5-6 years, and this has also meant that a lot of space is available there, and also the shopping habits have been affected. Now, in this case now, creation of demand is happening now, and that has also hurt that sector very much. And the more we are saying that, it is easier for you to establish the demand before you go to the supply. I think when you go generally in the real estate for a long time has been with individual developers, and individual developers who maybe had tracts of land or who have got homes that were converted, especially around Nairobi, Kilimani area and the rest, Kirideshwa, who had land that they converted into multiple houses, as opposed maybe to institutional developers who go look where the demand is, buy land and develop and sell. However, that trend is changing, and you're seeing more and more people not utilizing the land they have, but going out in the market and buying land because there is demand. And in this case, I'm just trying to reinforce the aspect of that. If you want to do good real estate, please follow demand. Don't develop land just because you own the land. Please get the land where the demand is. I think we've also seen a heavy trading, especially in real estate related products. And I think countries like China, India, Turkey are featuring a lot. However, because of the so many importation that is happening, because the huge importation of sanitary ware, huge importation of wardrobes and all those things, the market is funding because of the individual are doing the same. And what is happening, some of those factories in those countries are willing to come and set up here to reduce the cost and also have to be more competitive. So again, it's to look through how do we participate in this one. I think let's go that we also have markets that are emerging in terms of exit, and REIT is one of them, which is a capital market way, or a way of trying to exit real estate, especially offices and other commercial concerns that can be sold to multiple people by way of a REIT. Again, products have also changed, and we have more structured products for the market. And right now, and you'll hear more from my colleague, you can be able to go for a mortgage loan, you can go for a bridging loan, you can go for a construction loan, and all these and other structured loans can help you. You can also be able to go side by side with trade loans, in which case, if you're importing your things, you can do a construction, which we call interavailable, where you get some of your products through a guarantee. And in this case, you can just open a guarantee on this end, and for the supplier on the other end, of course, which reduces your cost and also increases security. I think we have got Kenya Mortgage Refinance Company, which has come in as a secondary player, and I think I had mentioned about it there. We have seen the government digitizing the titling and the title management, which I think is a plus, and also is saying that that process can be more efficient. And I think we have also seen registration amendments that are going to help in the way that titles are managed, especially the sectional titles. Thank you. Members, and I hope we are still going together. I think that's just a definition of the things that we are talking about, and mostly looking through at the four segments. And these segments we have we have explained about them, and we have put across that the most important thing here is knowing where do you pray, because the first step towards being able to get into a profitable segment of real estate is understanding which segment can I pray myself. And once you have an idea of where to pray, that's why we are defining the four segments that come into play. Now, if you look through into the sector and the sector dynamics, I think let's look at the first one. The first one is residential. Residential, I think, is where most of us are praying, and of course, is a huge demand. But I think if you look at it, residential comes in two formats. One is for resale, the other one is for rental. Now, looking at it, in the past future, there is a huge demand of standalone houses in the periphery of Nairobi, say, i.e., the metropolitan. However, like we have discussed there before on the other trends, you have to be careful about the land. You have to be careful about the titles. You have to be careful about the services. And I guess these are the things that are defining what can be done around the residential. It has a demand, but again, you have to also be careful on the pricing. Much of the market has already catered for the 10% ahead. So going down the whole pyramid is looking through at the lower end up to about 6 or 7 million, maybe max of 10. The good thing with the lower end, I think that's where the affordable housing program is operating, and a lot of support is there within the government and everybody else. I think commercial real estate is what we've addressed, and I think this one is a shaky market for now. Is a shaky market from now, and in this case, what we are saying is that the commercial real estate is not going maybe very well right now. But a part of it is going, in which case, if you have combined commercial real estate is working, in which case, where there are very many residential apartments, there's a combination of shops and the commercial on top, some small convenience shop and some small offices. I think that could be going the right direction, some small hotels and everything else, but it's not to look at the little commercial. When you go to the bigger commercial sectors, I think for now, I think the analysis is a wait. And again, if it's not wait, it is be guided by demand. Industrial and real estate, I think that's an area that we can look at through, and there has been a huge surge of demand for go downs because of logistics, a huge demand for office associated with those go downs, residentials that are very near those go downs, and I think that's something to look through even as we try to scope through which are the areas you can do. I think on the other one is Rand. I think Rand, our amenity for Rand as Kenyans, I think is high. And I think it is prudent now to start looking through how do we manage Rand. I think good number of us have got Rand they are holding all over the country with a good view that somehow maybe the story is that the tarmac will pass by there, the railroad will pass by there, and the value will increase. Let's call them more of speculative. And I think the challenge you get with that one is that the returns are rocked up, and maybe that Rand could be of better use elsewhere. So I think we need to have a trade-off so that we're able to reduce the impact and the pressure you're having on Rand. So Rand by itself, yes, is a speculative investment, but not a very, very nice investment. I think this just illustrates what we were saying, that on the lower end of the pyramid, we don't seem to have spent a lot. So the 60% is completely not taken care of. And I think, dear customers, I think that's one area that is a big opportunity, provided you can be guided by demand. Thank you. Next. Allow me to look at the impact of the pandemic and to Kenyans and also to the world in general, and of course its relevance into how you can take advantage. I think one of the things that has come in is that we've ended up in healthy eating. We can argue this one. We have added more with family moments. E-learning has come in, online meetings like what we are doing today, and those are apps. Whichever side you look at them, especially if you are disrupted positively. If you are disrupted negatively, of course, they are a negative to you. But if you look at this other side, then you can see the social distancing, working from home, washing your hands, sanitizing, lockdown, reduce social gathering. Let me put even a note here, and I don't want to say it's a question, and we'll react to questions. For those ones who are on site today, how have you catered for social distancing? How have you catered for an office? People will be working from home. You are doing a 2-bedroom apartment. How do you think that person will be working? How have you facilitated? Washing hands. People are really washing their hands. What have you facilitated? What have you put on the screen? I mean, on the unit. Have you put in a tap? Have you put in those things? Are they necessary? Do you think they are going to determine the number of tenants that you hold in that building? Do they determine the revenue? In terms of lockdown and reduced social gathering, what has happened is that family gathering is being held in the house. What's the size of the sitting room that you are giving? If there's another lockdown, people are locked within their own region. Have you looked at where your building is? Are there social amenities? Are there services? I think these are now the cardinal things that are coming through. That when you are planning and you want to have a very good investment in real estate, I think you need to cite some of these things. And I think hard lessons that we've been taught by a pandemic is that these things are real now and they are for us for going ahead. And it's important if you want to participate in this market and remain profitable, and especially when you're looking for a long-term facility, think about these things because they'll determine how far you go. Now, I think the other things that you have to look at is that rents have been impacted. Maybe, and this will be a discussion thereafter. I don't know to what extent. Our experience is very different. Maybe the impact was not very much on rent or on the part of the renter. There was a little bit shaky, but it stabilized very fast. However, we've had some of our customers who are impacted, but a majority of our customers, the rent was not very much impacted. What was impacted very much was the price. Price was shaken and I think was held constant at best, but most of them had to reduce prices. Now, the interesting aspect about rent is that when everything is done, people recoil back to the house. So whichever money the people had, they were taken into housing. We'll hear from our developers because some of them say their tenants are left, all of them. Others felt that they just reduced. Others had to accommodate them by way of rental. I think all these things are actually things that we need to put into consideration and ask ourselves, what do we need to do next, especially to maintain a stable rental occupancy? Because if you disrupted your rental occupancy and the rents are going down and you have a loan to service, that can really put you back several years. So I think it's an area that we need to discuss and look through. What is this prudent level of rent vis-a-vis the area, vis-a-vis the occupancy? Is an occupancy an indicator of how good your rentals are or comparable to the area? The other important thing to put here is that disruption of the retail market. Right now, people used to do shopping based on the malls and the others. People are doing shopping now based on wholesale shops and on retail shops, on the dukas that are around. How many can you see in your region? Because that can also affect your tenancy. I think the behavioral changes that we have seen about the people doing, meetings offline and all that, we need to be very careful on the impact it has. And I guess even in the future, when doing some of these apartments, I think you have to look for a business center on top for people who are working at home and need to do meetings. I think it's something to consider, but architects will advise us otherwise. I think on a macro level, I think reduced direct investment that we experience. But however, in the last maybe 6 months, there are more and more people who want to invest in Kenya, especially under the affordable. This might be guided by the frustration of returns in the other markets than anything else. Technology and innovation, and we talk about it. Collaboration with the government, I think, is critical. And I think working around where there are spine roads or where roads are developing can also reduce the cost of your investment and increase the return. And I think the last one is that we don't know the future of offices. Will all of us resort working from home? What will happen to offices? Or will it a hybrid method? How does it impact? How are we going to do the ones that we have today? How do we match them? Allow me to very quickly jump into another topic and within the same, just to help us to understand your role in affordable housing. I think as you walk in the journey of affordable housing and as you walk into creating opportunities around housing, one of the things that we need to enhance more is sweat capital in housing. And sweat capital can be enhanced by you participating in it, that's number one. And number two, by ensuring that the people you're partnering with, that partnership helps a lot. There are places where you can go and find that we find that even people who naturally we did not expect for them to own house, by coming into groups, by offering their labor, by participating in material, by using what they have been able to do that very well. I think there is a role in looking through that instead of a developer or the person doing it to try and harness everything, partnerships work better. And sweat capital from the people who you are working for can help a lot, even as a way of saving, and again, as a way of also selling and partnering and creating demand beforehand. Gone are the days when people used to do houses in maybe in an area of Nairobi, and that could be Umoja, Tena, and the other areas. And by the time you are finishing, all of them are booked. But that should be the ideal scenario. If you do not get all the houses then booked, then you have a problem, because by the time you are trying to put in tenants, it means you are exposed. You're exposed on the debt that you have, and servicing becomes an issue. We'll also recommend the one for groups and investments as a way of de-risking the way we do. And the same as we say, putting in people together is a way of being able to see demand even as you react. More collaboration in the government to ensure that you do not have a heavy expense on infrastructure, because the heavier the road in terms of infrastructure means your product will be more expensive. These are just oversized things that to look through, even as we drop into some of the key things that we need to look out as we do investments. Next. I think when it comes, one of the things that has affected, and this is a shared experience here, is fraudulent sales. I think there's so many transactions that are stuck in courts of law, stuck in disputes, stuck in so many ways. So one of the key things is verifying ownership, and title due diligence is a critical place. If you do not go through that process very well, it can be a very frustrating when you put all your savings and end up in a fraudulent sale. Either people selling what is not theirs, or the property that is being transacted has got issues. I think the other thing is adverse possession, and I think this is something that maybe we are not very keen in. There are laws that govern the way we do developments in our country, and some of them even say where should the building start from. That is, from a main road, from a river, they are all defined, and professionals have got, they are the best place to advise on this. However, you find that even the simplest of them, identification of the beacons, recessing, and establish and having those certificates is not done. The danger here is that when you put up a building and then you end up encroaching on somebody's land, or you encroach on a community or the road, I think the results are not very good. And especially if you have a facility, it can be devastating. You don't have a building, and the government has distressed you because of building out over the boundary. So in this case, using the professionals is a way to check. Environmental contamination is another issue. All of us now are feeling the cold that we have. When you ask people in that area, they say that our times are changing. I think the worst would be is that if we don't manage our environment very well, then we are not able then to have houses that we can be able to stay. We'll need houses with double glazing, with heating systems, or houses where extreme weather comes to affect us. So the question is, what is prescribed and how can we manage it? How do we ensure you have water in these buildings? How do we ensure that we do not impact the sewer and everything else is managed well? I think the other thing we have is, I think maintenance, I think, is one of the worst maybe area and weak area in our country. And very few of us are able to maintain properties very well. It could be, we can say it is the tenant or it is the landlord, we can say it is the owner occupier. But said and done, I think it's something that we need to put, number one, to be able to sustain value, and number two, to be able to sustain revenue out of those units. If a unit is well maintained, it tends to maintain very good revenue and return. Now, case in question here is that if the unit is not maintained well, chances are it will have a high turnover. And then with a high turnover, definitely what it means, of course, you have more running costs, you have to pay more fees to get in tenants, and naturally, you get disrupted in terms of servicing your debt. I think the other thing that needs to happen is overpayment of purchase, and we've seen several cases in that, whereby you buy because somebody else bought, but when you look at the real value, what you are buying is not sustainable. I think one of the things to understand is that we do not buy maybe the piece of land, we buy what you can do in the piece of land. So if you realize that what you can do in a piece of land cannot give a return, then the value of that land to you is less as opposed to somebody else. Meaning 1 acre can have 2 or 3 values to the same person. If 1 acre has 10 million and you are putting a house of 1 million, I think then you must ask yourself, is that land variable for you? If an area you can be allowed to put 100, maybe say about 100 apartments, and you only want to put about 2 apartments, are you having the true value for that one? So I think the other things to look through, I think, is the cash management and the cash cycle. And I think when you're looking at this, the important bit to look at is that we recommend that always, especially when you're doing rental, please check that you have 50% of your income that is retained. And 50% is what you can dangle as an amount to be able to take advantage and borrow against. When you go beyond 50%, chances are that you start feeling the strain and you do not enjoy your asset. Next. I think one of the biggest lessons we've learned now is economic downturn. What has happened now is some of the very desirable locations, very good areas, and we have had problems, leases cancelled and all that. I think it is important now that you start factoring such things, especially when you're looking at your real estate market. And do not forget that anything can happen like what has happened. So how well prepared are you with that? And that's why in the previous slide, I had said very well, 50% is a good margin, a good risk categorization that will not let you be exposed unnecessarily. I think we need to increase the level of the relationship between tenants and landlord. I don't know, the landlords who are here on this call, maybe I want to ask, when did the last time you had a party for your tenants? Maybe I want to ask again, did you send a birthday card for your tenants? Maybe I want to ask again, do you know them by name? Are you still having the aspect of fighting? That is the tenant landlord ever-ending fight. And what does it do to your property and destruction? Are you losing that and then ending up repairing your building now and then? Is that something you want to look afresh? I think these are new insights that you have to look through if you have to sustain your property, which is what you have used and dangled to the bank for you to get money. So if you have a better relationship with your tenants, if you are sending them even presents, if you are sitting down to discuss with them like two business partners and not landlord and tenant, I think it can change the way you do. And all these insights we can be able to share. We have a property hub where we think we have started getting these ones working. For you to understand, tenant is a landlord and a stakeholder, and a landlord is a stakeholder, and both of you have to work together. I think the other thing we've done is that when we are doing most of the projects, we underestimate the risk. And some of the risks that are underestimated, especially is the costing. We go into a site and then you don't have a bill of quantities, and you believe that simply by buying a truck, a lorry to deliver the material, you have reduced your cost by 30%. And may I candidly tell you that is not, and it won't happen. And what will happen at the end of that project, you still have to have incremental. You need more money. And when you need more money, it is midstream the project, your time is variated, and of course, you'll not meet your timelines. And in most cases, you'll be looking at restructuring that debt. And I'm not sure that's what you wanted. So please, let's not underestimate the risk. Let's listen to the professionals that are on hold. Let's listen to the architect. When the architect says this, I think it's good to listen and again to collaborate. And I think one of the things that we've seen in the especially residential, is where you go, you define your house. When it's being set up, you look at what is on the ground, you think it's too small, you say increase. Any increase of the size or any variation of scope is a cost. If that cost was not factored in, of course, it will bring disappointment. I think it's just to understand that there's a market decline and a market change, and the market changes very fast. And as market changes, and again, as even we say the underestimation, I think is the aspect of somebody who has designs. You do designs, they are 5 or 6 years old, and you're still doing them. 5, 6 years old is a long, long time for even rental properties. You find that what you are doing, you could be building a lot of dead space within that building. It was then, now it is not. You have to check on the demand of space around there. I know they are professionals, more professional in this field, and they can advise best. I doubt that there are many people now looking for a 3-bedroom apartment, which used to be style then. Most people are looking for studio, 1-bedroom, and 2-bedroom. Now, if you have a design and you just implement for 3-bedroom, I think, and you have that as a reading product, where does it leave you in terms of cost? Fire, flood, injury, and all those things, I think there are things to take care of. I think there are more fires in some areas. We've seen some people investment reduced to zero by these things. So how can you include them as a way of prudent management of the risk? Tax planning, I think we are not here on behalf of the tax master, but I think we have seen disappointments of some people when the tax master has caught up with them and they have not planned on this. It is very good to plan on tax, because if you don't plan on it, when they come, they distress us and tell us to stem it there. Of course, in most cases, it comes to affect you and it's a risk. Thank you, and I hope we are still together. As I come to conclude, let me say this, that the opportunities in this sector is that you can be able to build houses and sell. And as you sell, look at more of e-selling, look at more virtual tours, and look at website and online and exports as a ways of putting what you have. Whether it's rental or it's development, I think that's one to look to do, and those are opportunities. And affordable housing, I think there's a huge demand for affordable housing. Please do houses that are cheap. There are some people who have achieved 3, 3.5, even 2. Look through how you can be able to do that. There's a huge opportunity around there, and the market is ready. According to the government State Department of Housing, at one time, I think earlier this year, they reported they had about 300,000 people who had registered under their program looking in for affordable houses until 3 or 4 million. How can you take advantage of that as our customer and maybe an upcoming developer? How do you play in that area? Again, we need to create efficiency around the rental units. The rental units are affordable houses, but how do we create efficiency? How do we ensure there is water? How do you ensure that the security is there, the garbage is corrected? How do we ensure that the repair condition of the houses is good? I think we need to have a very clear understanding of the building code. I think that's also missing a number of our projects, because people have gone in, ignored those codes, and when they come and they see the red mark, of course, that's a loss. And it's telling them they did not meet. Maybe another government entity will come, you do not meet this regulation, and that becomes an expense, and they can actually even end up to bring down the building, which is a cost to the developer. I think the other thing to look at is solution. When you are looking at the development, I think there are new terminologies that are coming, opportunity around turnkey solutions. Turnkey solutions is whereby you come, put together yourselves as professionals, as a group with the market and everything else, and give a tanking, give a project, a complete project. It's something that you can look through. And I think there's a huge opportunity, especially for people who want houses. They want to reduce costs, but they don't want to get into the nitty-gritty details of construction and everything else. I think flexible financial solutions, please, I don't know what my colleagues will say, but an overdraft is not a solution to construction. Working capital is not a solution to construction. When you use those two products used for construction, it is very enjoyable in the start, but at the end, you're going to get stuck. You get stuck because that financing is not meant for that. And Patrick will talk more about that. Do demand-driven sales and ensure that you are walking to the door of digitizing income. And I'm sure our team here, Business Banking, they have got very good solutions about digital income and rent corrections. Digitizing your income means that you're able to tell who has paid when, and your money is going on the spot. And I think the level of manipulation is controlled because it remains only seeing through the other details, but the money is with you. Next. I think the other opportunity, when you're looking at the opportunities, I think the key thing is location. Location, don't forget, real estate location is king. Think about the property type. What property type do you do? And what mix do you create? 1 bedroom, 2 bedroom, commercial, retail, mixed, what do you do? And be guided by return. Income groups, who are you targeting? Are you targeting the low end? Are you the middle income, middle lower, higher end? And understand that market very well. In actual sense, is a definition we say, who is the economic man you are targeting? So income groups becomes very important so that you do not have a product that is targeting the low income group, but then you finish for the up market, meaning that you'll never get your value or vice versa. I think you need statistics and strategy so that you're able to see where which is the midpoint. For you to take a property which you have taken through debt, then try to get the best case scenario in terms of rent is spilling doom. In the beginning, you have to ensure that your rents are very competitive, even with the region. When you don't have a debt, I think you are allowed to play the other market of having maybe the higher rentals. If you try higher rentals and not a debt, chances are you'll have a hard time in putting in tenants, which also spells doom in terms of you paying your facility. I think property prices, I think, is another thing. Property prices exist on the ground and not on a computer. There's a tendency for a good number of our developers to keep on playing around with their cash flow on the screen and increase the price. The danger of that is that you have a stock that is there for a year, the second year, and the third year. Let me remind that if you have a property that is finished, a house, and it's worth 10 million, and you've stayed with it for 1 year, definitely, then you have 1.3 million additional cost on that one if you look at only the financing cost. So if you looked at the other costs that are there, then you can see the kind of cost you are carrying. So it is important that as a developer, don't speculate on your own development. I think going and very fast so that you're able to finish, you're coming to the end, is that's Nairobi. And I know some of us are not from Nairobi, but allow me to use Nairobi as an example. If you look at the Northern Bypass, that area, that is an expanding area. So when they say there are plots and areas to expand, is an area to look through. If you look through the other area, that is toward the Northern Bypass. The Eastern Bypass, again, you can see there's a huge area for urban expansion. I think if you look the internal area, just inside, you can see the rental renewal, which is an area that we need to look at. These are the areas that are coming in for rental. The same rental renewal, it's around there. The city center, I think very less is happening for us there. That if you look at the urbanization and densification, that's around Rongai area, that is to the lower end. And there is an area again to look through. Urban expansion on the other side, that is the Kikuyu side. I think that's what you're saying, Kikuyu, Togoto, and that area. Then on the other side, Northern Bypass, you're talking about Ruaka and the other areas as areas you look through. Why is it important? In each of these areas, you can tell the characteristics, you can tell the rentals to expect, you can almost tell the payback period to expect, plus minus, which now tells you, depending on your participation in your project, if you're putting in 10%, 20%, 30%, 40% of your equity plus debt, then you can determine which area works for you. Like we said in the beginning, buy a piece of land and look for where there is demand. Don't utilize a piece of land if there is no demand. Next, please. I think consideration for success in the current condition, avoid speculation. Recognize culture, context, and regard property buyers, tenants, and end users. Don't ignore. Those things have also tended to affect that there are culture issues that will come through in terms of the development. There are people who believe they cannot stay in apartments. If you go and put up apartments where they are, you'll have a throw by. So if you want to do that, then go where people have no problem. There are people who believe they can only stay in bungalows. You have to honor that. There are people who believe they must be in a garden. Take those things into cognition as you do it. Again, be creative. I think let's not replicate. It's not good to do a same design 4 or 5 times. The market is demanding. I think the generation we have now, I think is Z. They are very demanding. So please ensure that you are providing. And when you are providing, you have a room, you have a small daycare there. All those things are becoming very important. I think develop contracts with the suppliers and service providers. Contracts. In which case, it's easier for you to have a long-term relationship for you to sustain a development on timely basis. One of the biggest disruptions on site is standoff between suppliers and the developer. So I think when you have long-term contracts, when you introduce them to their banks, and I know business banking does that very well, that by the time you are coming in, you can come with your 10 suppliers, and you say, this is my bank, this is who are financing, so that in the event there is a delay or anything, they can also stand for you. They can give you products that are there. I think the other thing is a flexible model. You need to be very, very flexible when you go in. There's so many things that are changing and changing very fast. Flexibility is not change of scope. Flexibility is addressing things that you can address in a live project. So I think let's go that direction and expect unexpected. If you go there very constant, that because I've done this for 10 years, it has to work, I think you are in the wrong area, not in real estate. Real estate is really changing very fast. I think looking into community infrastructure, it's a high time when you're putting up apartments. Ask yourself, can you see the clinic? Can you see the nursery? And even if you're not providing, have them in mind, because you're going to determine the tenancy level, they're going to determine the return of your asset in whichever way you look at it. So think about that community infrastructure and also the physical infrastructure. And all those things put together will foster sustainability for your asset. Next one. I think way forward is achieving a balanced mix, affordable financing and affordable housing. I think you have to look at that. Partnership with key developers, investors, government cooperatives, and through public-private partnerships. Encourage support of developments targeting low-income groups through tax incentives and infrastructure development. Culture change to consider and accept alternative building technology. It's said in Kenya that when you tell somebody you're building a house and you tell them the alternative technology, they usually ask you whether it is bulletproof. I don't know why we have that measure as bulletproof, but I think it's one of the biggest issues that comes in. Is that house bulletproof? So how did we start using bullet as a way of judging the strength of the house? I think, ladies and gentlemen, so grateful that you have listened to me, and welcome and thank you, and God bless you all.
Ladies and gentlemen, that is Chris Shege, Head of Mortgage Finance Department at Cooperative Bank, and he will be with us to the very end to respond to questions during the question and answer session. And an interesting conversation happening right now in the chat. We can see quite a number coming through. Calvin is asking, suppose I have a strategic plan, can Coop Bank partner with me to develop this? Calvin, stay on, we'll be responding to this. Trevor Daniels and Eric Nyamai, thank you for your comments. We will indeed share this recording with you. And I also see Daniel concurring with you, Chris. This is David Githuka, sorry. He's concurring with you that indeed land value is dependent on the potential land use. Very insightful session we've had. And I hope you'll stay with us to the very end. A very warm welcome if you're joining us now. And investment opportunities in the real estate space is a very topic of discussion this afternoon, where we are discussing possibilities that you, as a business person, can explore amid the recent changes seen in this country. To join the conversation, remember you can leave a comment on the chat box below or email us on businessbanking@coopbank.co.ke or call us on 0711 049 129. You can also call us on 0711-049-928. Our next speaker, ladies and gentlemen, I will speak about real estate opportunities available through Cooperative Bank. And for this, I will take the next couple of minutes to share insights in this very area. As introduced earlier, my name is Patrick Masharia. And as I begin my presentation, I remember a question that had come through from a lady by the name of Esther. Esther, I hope you're on this call. And Esther had asked us two valid questions. One, how would one know that land that he or she is interested in is not a public utility property? And the second question from Esther was, what is the procedure to establish that the land you're buying is clean, i.e. to avoid future issues such as being frustrated or losing the property 5 or 10 years down the line. If you're on this call, Esther, please stay on to the very end, as we will be sharing insights on this and other areas that probably you can consider even as you invest in property. Ladies and gentlemen, I think Chris had talked to this slide, and the main point I want to emphasize on is the first one on sale of properties. And thanks to the pandemic, we've seen quite a number of things happen. We've seen vibrant selling platforms like what we have at CoopBank, goodhome.co.ke, as a way of selling and buying properties. We've also seen other items like virtual tours for upcoming and existing projects taking center stage, because you and I would not want to risk our health by physically walking to view a property. If this can actually be shared virtually, I think that is what we are calling for. And that is taking center stage. Of course, other things include virtual listings. And I think Chris had alluded to this as a way that we are seeing things take shape as far as real estate is concerned. I think as promised, I would want to take us through the approach to investment, at least from a CoopBank perspective. And that's why we are calling this CoopBank's approach to real estate. And there are several solutions that you can actually take advantage. In view of what Chris has talked about, there are different packages that as a bank we have for you, yes, that you can use to actually invest in real estate. One is then buyer mortgage financing. And here you're looking at a scenario where somebody is keen to buy a property. It could be land, it could be a commercial property, could even be a rental property or a house for your own occupation. And I think the bank is well equipped to serve you with this particular solution to help you acquire such a property. We'll see how this works in due course as we move to the next slides. You could also be having a property, an undeveloped land, and keen to take a construction facility. And for that, I think the bank is well equipped. And I think the edge that we'll bring on board here, even as we support you to implement your project, is the fact that we'll also guide you through the implementation by doing what we call project management and enabling you to go through this seamlessly. Of course, there's the equity release, which is very famous. And this is where you have a property to your name, a titled developed property to your name. And you can actually get money against this to either buy another property, renovate another property, develop another property, anything, provided it's real estate related. A new kid on the block is what we have as number 4, landlord financing, where for the landlords in the room right now, you can actually take advantage of this particular solution. Quickly, just to mention how it works, a situation where you have a property, say, valued at 100 million, we can actually mark a limit on that particular property. And anytime you have a real estate related need, all you need to do would be to come to the bank and draw the money to implement your next project. Now, the beauty here is with the turnaround time, because all you need to do is to prove to us that indeed you have a project, and you will draw against the limit that has already been marked for you to implement your subsequent projects. Now, looking at the next slide, we have bridging project finance. And this is a situation where you're looking to put up units. I know Chris has talked about affordable housing and real project financing. And this is where bridging projects loan sits in pretty. And you're looking at a situation where we will guide you and give you insights on how to implement your project and how to fund this money. Of course, the right way to look at this would be to look at the right mix between the equity, your equity as a developer, the buyer's pre-sales, as well as the bank loan. Because when you hit the right mix, definitely your return on investment will also look pretty at the end of it all. Next is escrow account management. And this is a situation where As you're putting up units for sale, the bank can also take up the role of escrow account management, where we will be managing the funds as they come through. And this could be from either the people who are buying these units, or for those who are putting up rental properties, we could also run that there as well. Of course, we have other interesting solutions like Property Hub. And this is a situation where you walk in and you get all property related solutions under one roof. This could range from property sales, as we'll see in subsequent slides. It could also range from, or rather, it could also include the partnerships that we have with other players in the space, like suppliers of building materials and others, as you'll see in the subsequent slide. Now, for those who are watching what was happening over the last 3 or so weeks, there's a new product we launched, the pension-backed mortgage. And this would also sit very well, particularly for you who has staff under you. If you have pension or other pensionable staff members in your companies, they can actually take advantage of this particular solution to enable them own their own homes. And the list is endless, looking at the varied solutions that we have in place as a bank. I think the key thing is to continue with the engagement that you have, of course, through your relationship manager or banker, and we'll be able to identify the right solution for you, even as you continue investing in real estate. Now, quickly, maybe in another 30 or so seconds, I would want to talk about the journey, because you've seen this come across quite a number of times where people are asking, why is it lengthy? What do I need to do? How should I be ready if I'm coming for a facility from Cooperative Bank? And indeed, I would want us to spend some time just to demystify this further. And we've actually broken down the stage into 3 distinct areas, the loan application stage, the offer acceptance, and the conveyance stage. And I'll take us through this just to appreciate the logic, why we've broken it down that way, and the reason why we ask for the different items. Under the loan application stage, this is where, as an investor, as a client, you'll come to us and submit your request to the bank for appraisal. Probably you want to undertake a construction or you want to buy another property. So you will bring in your documents. The bank will go through, in other words, the bank will review your request. And where successful, the bank will issue you with a letter of offer for that facility. Of course, the letter comes with conditions to be met. And this could include you opening an account if you're a new to bank customer, signing a sale agreement if you're buying a property, as well as making a down payment, amongst others. Key to note is that these conditions would vary on a case-to-case depending on the nature of the transaction. Of course, that would trigger the second stage, which is the offer acceptance stage. And here the expectation is that as a borrower, you'd be required to accept the offer for the loan and also meet the offer conditions, just to enable us move to the next stage. The last is the conveyancing stage, and this is the legal stage where several things get to happen. This is where you'll hear of consents, either spousal consent or consent to transfer and charge, as well as issues to do with capital gains tax and stamp duty payment. But all these are to facilitate 2 key things that are supposed to happen under the conveyancing stage. One is transfer of property to your name if you're buying the property. And of course, the last one is registration of charge in favor of the bank, because you're taking that property as security. Of course, with those stages, with all that having been completed, the bank would move on to release the funds appropriately. Of course, if it's an equity release, the funds would come to your account. If it's a construction, the expectation would be the money would go to the contractor. And if it is a purchase of a property, the money would be wired straight to the property seller. Of course, something else that I would want to talk about would be associated costs, because anytime you come to the bank for a mortgage facility, there are associated costs which range from between 7 and 9% of the property price. Why the difference? Why the range? Because there are some fees which vary depending on where the property is, as we shall see the subsequent bullets that we have. The first of these costs is the legal fees. Of course, for the professionals who will facilitate transfer and registration of charge, you'd have to set aside an amount for the lawyers. There's also valuation fee. And this actually responds to the question that we had seen from Esther about 2 weeks ago, who was asking what level of due diligence is done on this particular property. And Esther, to respond to your question, bullet number 2 talks strictly to what you had asked. When you talk about valuation, we are basically looking at due diligence around the property that you're either buying or presenting to the bank as collateral for the loan. Now, the due diligence comes in different forms. You're looking at a search, which will be done by the valuer at the lands office, which is an official search. You're also looking at other things which would be historical, looking at the historical data or information that is available with regard to that particular property. One way or another, because we also have digitized data that is currently available, you'll be able to establish whether that land is listed in the Ndongo report. You remember what happened in 2004 when the Ndongo report was commissioned. So we are able to tell whether the property was illegally acquired and any historical data that would be available with regard to that particular property. So Esther, your question, the response to your question lies in item number 2, where the valuer would come in to do proper due diligence on that particular property. Other costs revolve around stamp duty for transfer, and this is where the difference comes in. There are areas where you pay stamp duty at 2% and others at 4%. If you're looking at Nairobi, Mombasa, Kisumu, parts of Nakuru, parts of Thika, stamp duty is payable at 4%. And these are largely properties that are leasehold in nature, while in other areas like Kiambu, Kajiado, Mavoko, you largely pay stamp duty at 2%. Of course, the other item is stamp duty for registration of charge, also payable to the government of Kenya, commitment fees to the bank, and of course, the mortgage insurance covers that come with a mortgage. I had seen an interesting question, but we'll take that during the question and answer session around the mortgage insurance covers. As we look at property investment, it would be keen for us to align with what is currently available. And I think Chris had alluded to this earlier, that the properties we are looking at will fall into 3 broad categories: residential properties, which would be bungalows, apartments, maisonettes, mansions, etc. And they would be in the areas that we have there, such as Ngong Road, Mombasa Road, Limuru Road, Kitengela, among other areas. You'll also have another category of commercial properties, and this would be your contemporary office space, office blocks, shops, amongst other properties that fall within that area. And last but not least would be land. And I know this is a very passionate area for us Kenyans. We want to see where we have land that is readily available. And this could be agricultural, residential, as well as commercial. And moving on, it would be good for us to note the areas where all these investment opportunities are currently available. As you can see in the current slide, you can actually get an apartment, a 1-bedroom apartment along Mombasa Road for 4.5 million shillings. Yes, starting from 4.5 million shillings. I can see a question popping up on whether these prices are realistic. I can tell you they are, because these are bank finance projects and properties that indeed we are currently selling. You'll also see apartments in Gong, which are selling for, from 6 million shillings. Along Limuru Road in Ruaka, you can get an apartment for 9 million shillings, of course, complete with all the amenities that would come with such an investment. Off Mombasa Road in Sabaki area, you can get others from as low as 1.155. So it means all of us have an opportunity to invest in real estate and acquire these properties as they come. Along Ngong Road, you can get others from 3.5 million. Off Kangundo Road in Molem area, 6 million shillings. Moving back to Mombasa Road, you can also get others for 2.65 billion shillings. Maisonettes, which are more or less standalone units, for 16 million. And in Kitengela area on Namanga Road, or rather off Namanga Road, you can get others from 11 million shillings. Now, for those who are looking for a return on their money and they're looking to acquire either office space, maybe to just house their operations, or a property that will give them a return on their money, here is a space you can also play in. You can get an office space in Westlands on Waiyaki Way from 54 million shillings. You can also get a commercial building, and there's a prime one in Nyeri, which is currently going for 120 million shillings. A property where you can house anchor tenants like banks, hospitals, supermarkets, etc., as well as other tenants on the upper levels. In Kahawa Wendani, you can get a commercial block with an income of about 1.2 million shillings from 120 million shillings in the asking price. And in the upmarket area, we also have an interesting concept, a block of serviced apartments, which is currently selling for 675 million shillings, an opportunity that you'd not want to miss. As I had said earlier, there's an opportunity for each and every one of us. And as you can see here, we also have land available in different areas, ranging from Rongai to Ala area, Kitengela, Merisho in Matasia, as well as Thika. And these are properties that range from 1 million all the way to 5.2 million shillings, of course, depending on what you want and of course, your budget. And I think with that, ladies and gentlemen, noting that we are pressed for time, I would really want to thank you because quite a number of questions are coming through, and thank you to you all who've made these contributing questions and chats on the platforms. And although we are almost running out of time, it would only be fair for us to take several questions that are coming through. And at this point in time, I would want to invite Peter Ndumia to help and moderate the question and answer session. Ndumia, when you're ready.
Patrick and Chris, thank you so much for the insights. I think a lot of comments here on the session. I think majority have really benefited from the presentation. Thank you so much, Chris and Patrick. And I think maybe Chris, you have a few questions for you, and if you don't mind, you can put on your video so that we can also see you. And there are a few questions for you and a few questions for Patrick. One of the questions here coming from Calvin is saying, suppose I have a strategic plan, can co-bank partner with the owner to develop? That is one question for you, Chris. There's another question here for you, Chris. Which sector do you place the market stalls, the stalls that are also coming up? So you want to make a comment on the stalls, and what would be your recommendations on the same? I have another question for you, Chris. From your survey in this sector, how viable is an apartment development in Kisanju area? Yeah, area around Kisanju, what would be your comments on the same? Another one, Chris, for you is it right time to build hostels next to upcoming university? Would you also want to comment on that? That one is coming from Lydian Gold. Maybe for Patrick, I think there are two questions that are coming for you. This is on the fees that are charged. On loan on construction, other than the 8%, do I need to raise some amount or you finance or the other entire amount? Apart from the 8% that you talked about, is there any other charge or the financing that you need to, the customer needs to contribute? Then I think, Patrick, another one is on the interest rate. What is your current interest rate? This one's coming from Calvin. So maybe you can endeavor to take the first set of questions, Chris, as we proceed. Thank you.
Thank you very much, Peter, and thank you, our customers. I think the first one is a partnership. Yes, we do that. We can work with you. We can try to understand the project. I think we have 4 guiding principles in understanding any project. Principle number 1 is project concept. Principle number 2 is project financials. Number 3, project implementation. And number 4, project exit. And that's the basis in which you evaluate your project. And if it's meeting those 4 criteria, I think we can work with you. But again, remember, one of the highlights that we gave is we need a demand-driven project, not speculative-based project. So on the question number 1, I think the person who had asked, I think yes, we can, and you're welcome. Walk into any of our branches or coroners, and then we can look through what it is, and quickly we'll be able to tell you how we can be able to create a journey. I think of importance is that ensure your project is answering a need. If it's answering a need, I think we are partners. But if it's not answering a need, that can become a challenge. I think the other question was stalls and where we classify stalls. Stalls, I'll classify them as a temporary structures. And the problem here is that when you're doing stalls, they can be of 2 times. At times when you own the land, or when you do not own the land. The good thing with stalls now have evolved in Kenya, and you are seeing people leasing land, even expensive land, 1 million or 2 million, put up some containers and establish stalls there. They are very lucrative in terms of returns. The return is very good. Your initial capital is very low. So as long as you don't treat it like you can't take it like a 15-year or 20-year facility. This is something like almost a working loan, because what you're looking at is facilitating. You don't own the land at times. And even if you own the land, the structures are not that can withstand a 15 or 20 year. The repair part will be very high. So I'll say they are temporary, but yes, they are lucrative. And actually there are areas you can recommend for stalls simply because it's the only viable option for now as the area develops. I.e., if you are in an area that's emerging, if you're in an area that's opening up now, so instead of going there and investing maybe 20 million and waiting, I think you can develop with the area, and stalls are a very good way of going about it. Number 3, viability of apartments around Kisaju. I think that's a debate now. The debate will come if we can use a simple analogy here. Every shrub you create is like a new ground you have created. For now, is asking yourself whether the cost of that shrub vis-a-vis the cost of land next, if they compare. If they don't compare, then you might well look at your options. 2, you must look at which market are you addressing. The Kisaju market, what is critical? Why are you seeing the apartments? Are they for now or for future? I am not saying the whole of Kisaju, but I don't know where specifically it is. But I think apartments tend to do very well in areas where there is huge demand and there is clear shortage of land. So I think you need to do more evaluation before you embark on apartments. What would happen is that there's nothing wrong. You can invest in the apartments, you can build the apartments, but I think the return on your asset will be a little bit distorted and can be very frustrating when you have units and for 10, 15, 20 years, you can't have anything out of them. You're just paying a facility. The last one is hostels. That's a very dicey one. Hostels have really been affected. Doesn't matter where you're building them, you need to be very careful on that. That generation is very tricky. They like hostels that are very modern. They like to have Wi-Fi. They like to be next to the college. They like, the last week I had a visit, somebody told me they ran away at night. Now, with all this, then you need the university to help you. Now, for the university to help you, then you must put their standards. Now, in terms of the projections, since the change in the uptake of the university, where I think everywhere is being absorbed, there has been a slow demand on hostels. So you'll almost be coming into it on the existing market. So I think you need to do your research very well before you say yes. And at the same time, you need to build hostels of the future. In this case, talk about student centers, not hostels. And in the event that you're not sure and you're just catering for a temporary need, then you can do rental apartments, 1 bedrooms, then with a clear view that if that market is not working, then you can just resort into the normal housing. Thank you very much.
Thank you so much, Chris, for those answers. As Patrick comes up, there are 2 questions that I want you to address. Patrick, how lenient would you be as a financier to a developer struggling with occupancy once the construction is complete? I think there's one who also want to learn more about the financing solutions that you give to those customers who are also out of Nairobi, like Kilifi and Bungoma. So you want to comment on those 2?
Thank you, Peter. Thank you for that. Sorry, I didn't get the name for the person who had asked the first question. But on leniency, I think that's a very valid question, and thank you for that, because we've seen, and Chris had talked about this earlier, investors who would put up units and then look for buyers later on, and we've realized that has not been working very well. From a bank's perspective, remember one of the solutions I talked about, the property hub? We can actually come in and partner with you, because from where we sit, and I think in the very first slides, we saw something about the bank's wide reach. You're looking at the bank with a current footfall of more than 8.8 million people. And these are individuals like you and I who have got different needs. And that is the first point, or rather the first port of call for us as a bank. Through the property hub, we can actually help you to market these particular properties to the customers who would be looking for similar solutions to their diverse needs. So the key thing is for you to reach out to us. You can also give your contacts on the chat box. We can reach out to you directly, and we'll be able to see how we can work with you for your properties which are financed by the bank to help you market them to the market. The whole idea is to have the three parties walk away happy. You'll get to sell your property and by extension repay your loan. Having paid the loan, I think the bank will be happy because you're one of the many happy customers. And whoever comes in to buy the property will be a happy customer. So reach out to us, or rather leave your contacts on the chat. We'll be able to take this engagement even further. Peter, I think the second question, I also didn't get the person who had asked that question, and it was on the financing solutions, because I think the vibe has been around what we're offering in Nairobi and environs. But what I would also want to demystify here is that we are looking at funding any project within the country, provided you're looking at a property that is in an urban area. That's number one. And two, a property that has either a title deed or a certificate of lease as proof of ownership. A reason being, as a bank, we are not very comfortable taking properties that are on allotment letters or share certificates for reasons that you know why. You know, those are documents that are not issued by the government, and as such, it may not form a very good security for the loan that you're taking. So if you're in Kilifi, I think that client was actually in Kilifi. If you're in Kilifi, if you're in Migori, anywhere, provided it's within an urban area, what was initially termed as municipalities, and provided the property has either a title deed, a certificate of lease, or a sublease. If you're looking at an apartment, you're more than welcome to access the solutions that we have. I think, Peter, that's it for those two questions. We'd be glad to take more as they come through. Thank you.
I think you mentioned of some investment properties around Nyeri. So someone is asking, how do I get that information? And just to want to access that information, to be able to access that. Then there's one that had come from Geoffrey Gitonga. He had asked about the financing amount. Apart from the 8% charges that are deducted, do we finance the other entire amount to a customer for purchase of the property? Thank you.
Okay, thank you, Peter. And thank you, Geoffrey, for your question. I think your question was around associated costs with regard to a construction facility. And as you come up with the construction project, allow me to put this to perspective for us to know, or to appreciate where we are coming from. Anytime you want to undertake a construction, the general assumption is that you already have the land. Of course, the land is titled, is within a municipality, that's a tick. Having crossed that, there are several things that ought to be in place even as you come for financing from the bank. The assumption here is that you'll have sat down with an architect to come up with a concept, a structural engineer just to design how the weight will be distributed and all that. And also importantly would also be a costing on how much will be required to bring the project completion. So we expect that you'll have sat down with a quantity survey as well, just to do the costing for that particular project. Now, with those items in place, appreciate that there's a cost element to that. So in addition to the 8% that you're supposed to raise to cater for the costs that we had talked about earlier, you have to take care of other things like professional fees. You have to take care of preliminaries like county approvals. You'll also have to take care of other things that will be associated with this particular project. Remember, we had talked about insurance, and these are key component with regard to any construction facility. When you're undertaking a construction, anything can happen. Materials could be stolen on site, people could get injured, the whole building could actually come down tumbling, and that's a risk that you don't want to carry as an investor. And that's why we have these other things like insurance coming in place, just to make sure that you're covered even during the implementation stage. And that's why you'll hear of construction professionals talking of the CARIC, or the Contractors All Risk Insurance Cover, or the WIBA, which are very critical. So in short, in addition to the 8%, the 8% is only with regard to the cost that you will spend because of the mortgage. However, the other costs are stipulated by law and as enforced by the authorities like the county and NCA will still have to be incurred. Remember, there are areas where you'll also be requested to do an environmental impact assessment, and that would be a situation where NEMA has to come in. So all these are considerations. But then again, remember the chat, the communication lines are open. If that does not adequately respond to your question, you can still do an email or a chat, and we will be more than glad to to elaborate further. Peter, what was the last question? I think you had talked about two. You had raised two.
Yes, I think someone wanted to get details of the apartments.
Oh, yes, about the Nyeri property. That is just one of the many investment solutions that we have. And actually what we could do, even as we end this session, we'd want to upload something on the chat function, the list of available properties for you to look through and see what would suit your budget and of course what you intend to do in real estate. The Nyeri property is actually a commercial property. I think just to respond to that question, is a commercial property within the CBD. For those who are conversant with Nyeri town, it's actually along a road called Gakere Road next to KPLC building. It's a very prime property. And I think you can also leave your comment or rather your details, and we'll be able to get back to you on the nitty-gritties with regard to that and many other opportunities that we have available through Cooperative Bank. Peter?
Yes, thank you so much, Patrick, and thank you so much, Chris. I think as we go to close, I would be inviting Chris and also Patrick to give their closing remarks. And before Chris, as you share the closing remarks, Chris, maybe there's one question you want to answer as you give us your closing remarks, is why is there a general lack of planning and vision of housing projects estate in Kenya, e.g. roads, water, sewage, shopping amenities, children playing grounds, adult recreational facilities? You talked about informal sector. Then what is the difference between the two? This is coming from Evans Mudanya. I think, Patrick, when you be presenting, as you give your closing remarks, there's one question here from Noel Della. Does the county approval and insurance needed for a private residential construction? Does the county approval and insurance needed for a private residential construction? So please, over to you.
Thank you very much, Peter, and thank you, our customers, and thank you, Patrick, too. I think that it's a difficult question why we actually don't pick up on planning and why it's very difficult to get our spaces, our public area, and everything else right. But I would say is a bad culture maybe within ourselves, and which we need to manage, because all these places have got their relevance. And you realize that value appreciates when you have observed the rules. When you have not observed the rules of the game, in most cases, you could be declining the value of your asset. So my play here is that it starts from the basic, in which case, we have a tendency, you want to do beacon to beacon development, and you want to maximize on your return, but the thinking that you maximize your return only by having more. You can maximize your return by having more comfortable. You can maximize your return by having more utility. I think you can have a rent of 10,000, which you charge for 8 months, or a rent of 8,000, which you charge for 12 months, because you have got water, constant water, because you have a guard, you have. So if you look at 10 months, at 8 and 10 months, 12 months, 8, 10 months, 10, I think you can see the difference. And the question here is that once you have a huge turnover, sustainability becomes an issue. So my plea here is that they are the basic things. How clean is the building? Do you have a play area? Just like put across by our customer. Do you have a play area? Do you have water that is constant? Do you have security? Do you have garbage where garbage will be done? All those things come in handy. So I hope I have answered that one. In my concluding remark is that real estate is an interesting place to be in. In Kenya, we don't need to convince anybody to be in real estate. All of us are in it. But I think it's to understand that you can make or not make money. There are very, 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 very many people who are in real estate, and especially in rental apartments, who actually do not have any money for themselves. My closing remark and my advice is that ask yourself, if you have used more than 50% of your rental income, then it means that you need to check, because it means then your asset is not earning you enough. and you need to have 50%, and then paying debts go to 50%. That's the best way and ideal way. Again, if you have got up to 50% and you are seeking for debt and you're only using 50%, cooperative bank will work with you in terms of recreating. If you are a landlord and you want us to hear more, I think you can leave your contact there, and as landlords, we'll sit down and discuss how can you take advantage of structured financing that can help you continuously develop a property per year, at the same time not flouting any of those rules. Thank you very much, and God bless you.
Thank you, Chris. I think as I proceed, I will take the question that had been posed by Peter. And there's a client who is wondering whether, if they're putting up a house for their own occupation, whether they would still require the county approvals and also to procure insurance covers related with that particular investment. And the short answer to that is yes. Just to elaborate on that, the county government comes in just to authorize any developments that are coming up within a certain area of jurisdiction. So yes, you require that, failure to which you run a risk of getting the property being brought down by the county, as you saw some time back in Isli and Syokimau, if I'm not wrong. On the insurances, allow me to talk about the three that would be required, which are mandatory if you're taking a mortgage. The first one is life, on you as a borrower. You don't want a situation where the loan is running without any life cover in place, because what that does is that in the event of death, if somebody passes on while still servicing the loan, then insurance would come in and clear whatever balance would be outstanding. So that's the reason why you need the life cover. On fire, that would be required when the project is completed, so that if the property is destroyed by fire or any other calamity that we can think of, the property would be restored back to how it was before. And lastly would be the contractor's all risk insurance cover, and that one applies only during the construction period. And we talked about the different possibilities, and that's why that would be required during the construction period. Now, just to give my final remarks, I think some comments which had been made earlier is that there's an opportunity for each and every one of us. I think the main thing would be for us to dream big, approach the bank, and let's look through whatever possibilities you have in mind. Let's put our heads together and see how, as a bank, we can support you to realize your dream. Remember, we are in this together. Our core business is advancing money, and yours is either as a developer or a landlord. You play your role as an investor. And once we put our forces together, we will be able to achieve something in common. So mine is to encourage you to walk in. And as you can see, there are contacts currently on the screen, and we'll be more than glad to walk with you the journey. Thank you for your time, and back to you, Peter.
So much, Patrick, and thank you so much, Chris. So as we close, I know Moses, our head of business banking, is in the call. So Moses, if you can hear us, maybe you can just close for us. Yes.
Thank you, Peter. Yes. And customers, I think very good insights coming through from Chris and Patrick, and I think is now for us as interested parties in this business to ensure that maybe we take action. And just to, before I go to the call to action, I think there are three things that from where I sit as an advisor within the MSME business that maybe I need to highlight to my customers. Number one, there are three risks. Let me call them risks that I see within ourselves as MSME customers. And I think one of the key ones, and I know that's why maybe we set this, is what I call the risk of mismatch. And for a business customer, the risk of mismatch comes in when you draw money from your business to go put up a house, to go put up a commercial unit. I think all those solutions that Chris and Patrick have told us, you go draw out money from your business and go put it out, and I think put up a house there, and I think that's a risk of mismatch, saying you are drawing out of your working capital to put up on a long-term investment. And that's why then we are saying we have solutions that will help you de-risk this element of mismatch. so that on the other hand, you're able to do your business smoothly, and then you're able to progress with your construction activities or whatever other activities, be it buying of land, be it putting up a house. I think we run that risk of mismatch. I see it very often within most of us, but we are saying as a bank, we are solutions that will help you in terms of both ends, running your business and also the kind of investments that you would also want to have. The second thing that the risk, also a risk that I see, is you have a mortgage solution, and there is a risk of diversion. And this comes in it's a very common risk that comes in MSMEs, where you've been given money and you've seen a plot next to you that you'd want to purchase. Essentially, the money was given to do the property. What does that happen? What does that do? You have been given money and you'd want to go, instead of maybe finishing the construction, you'd want maybe to purchase a motor vehicle. What that happens is the diversion. So the intended project will not be completed, and of course now there is that diversion. So it will not give you the income that you are looking for if it was a commercial property. So I think is one area that we also need to say, how then do we stick to the budgets? How then do we stick to the projects? And if there is the other need, we can always go to the bank, because there is that financial support that comes in. I think that is another critical area that as MSME customers, I would want us to really adhere to. My third area in terms of also risks is the use of professionals. I think we have QSs, we have engineers, we have architects. I think I want to encourage us as MSME customers to make use of the professionals in terms of advice. I think what I see mostly, Chris and Patrick, within the MSME space is that you are a business person. You are a business person, and you want to be the professional in all those areas. You'd want to be the engineer. You'd want to be the architect. You'd want to be the contractor. I think let's also make use of professionals. It saves a lot of cost. It saves you a lot of hassles as an MSME customer. Let's make use of professionals where we can. Finally, as I come to the call to action, I know you've gone through that session, very insightful in terms of the tips that you've been given, but you can only action it by, number one, visiting the branches for more information on the mortgage solutions. The branch near you, we have a branch manager. We do have a relationship manager that can give you more insights. I think those are the agents of Chris and Patrick out in the branches. Please visit your branch, get more information from those people, the branch managers and the relationship managers. Again, the other thing that I would want to say, let's leverage on enhanced digital solutions to continuously bank and payments to save payments and even saving. And I think this one now speaks more to all the business people, the people who are landlords. These solutions would help you in terms of even collecting rent. I think Chris mentioned of reduced physicality, the issues of social distancing and what have you. Let's make it efficient through registering on COP digital solutions to ensure that you collect both your rent and also the other incomes that you make as a customer. And I think Chris and Patrick have also put up a case to say, as a bank, we do financing for mortgages. So present your needs for support in the bank. We have a lot of money for the MSMEs. As far as the projects are viable, as far as you meet the solutions, the requirements, please present your request to the network, the branch manager, the relationship manager, and Chris and Patrick have also given their contacts. Reach out so that we can support you in terms of the needs. And I think last is that all these materials that you are going through will be shared to yourselves, but they are all deposited at the MSME online portal. Please visit our website as shown there, and you'll be able to get that material. Last is to urge ourselves to keep safe. I think we are we are told is almost a fourth wave, or I don't know what it is, but I think it's just to urge ourselves to keep safe. So thank you so much, customers. As I invite those who are not patronizing cooperative bank solutions, please feel free to engage and ensure that we can walk the journey together. Thank you. Back to you, Peter.
Thank you, Moses. Thank you, Chris. Thank you so much, Patrick. I think that presentation was very good, even from the feedback we've gotten from the customers. We anticipated to end at 12:30, but I think the session was quite informative, and we felt that we need to extend. Apologies for our time, but we hope that in the next session we will maintain the time. So thank you so much, our customers, for being patient, and a lot of engagement coming through. And as Moses have said, let's continue to partner, get more information from us, patronize our services and the products that we have. And I'm sure you'll be able to benefit from us. So let's keep the engagement. We'll continue to have these webinars. We have the next one next week on trade solutions. If you import, export, if you want to start importing, you want to start exporting, there are opportunities for you, and we'll be showcasing that one in the next webinar. So we want to really appreciate you for being there for us and being together in this particular session. Asanteni sana, we want to close because of time, and we want to wish you very well, and God bless you, and may God bless your businesses. Thank you so much, and goodbye.